Hey everybody, and welcome back to H Invests. Today we're going to be analysing Western Union, which is one of the massive players in the global currency transfer market. Very, very big company, very geographically diverse, and a massive legacy operator in this industry. It's a pretty stable business, but in the past 6 months, the share price has declined 40%, which is massive for a company like Western Union. So today we're going to work out, are the shares a good deal, or is this a value trap? Is Western Union a good buy going forward? I hope you guys enjoyed the video. Right, so what got me interested in analysing Western Union? Well, this was primarily a bottom-up investment thesis, and then I looked at the macro afterwards. So, as you guys know, I have this high-quality dividend filter, which is very strict. It screens for safety, it screens for growth, it screens for all kinds of things that make sure that the company is, number one, a quality company, and number two, that it can keep paying its dividends and growing its dividends in the future. And of the whole US market, only about 50 companies passed this most recent screen of this dividend filter, and Western Union was fourth highest yield. So that's basically how I found it. A 5.4% yielding company in terms of dividends, and it's stable dividend as well, according to my strict filter metrics. If you want to learn more about the filter, there's a link in the description to a video where I go down the full breakdown of everything that the filter looks at. Although we will also look at the Western Union metrics for this filter later on in the video. You can see on the right hand side the dividend payments over time, and you can see some pretty decent increases there. Western Union have done a really good job of increasing their dividend over time. Here are some more metrics. So you've got turnover, which has been pretty stable over the past 10 years. This is one of the things we need to talk about going forward, because the turnover has been flat, which is showing stability but lack of growth. In the past year, we did see a slight decline. So a company like Western Union have really big COVID headwinds, which we're going to go over. Free cash flow has been relatively stable, but we had a couple of bad years in 17, 18. The dividend, however, has been increasing, and the payout ratio is still very low. I mean, the payout ratio, look at this, the payout ratio is about 50% at the moment. And also the free cash flow dividend cover, we're currently looking at 1.9 times. So despite these flat metrics, Western Union still have a massive margin of safety to increase their dividend going forward. But here is the share price decline, right? So you can see the history. The share price has had like this modest uptrend over the past 10 years, a little bit of choppiness here, and then all of a sudden gets very volatile. This is the COVID crash in early 2020. And as I said, because a company like Western Union has massive macroeconomic headwinds as a consequence of lockdown, their share price went down a lot. And unlike the rest of the S&P 500s, they haven't really recovered so much. They got back up to a high of just about 26.5. But since then, there's been massive negative momentum in the share price, absolutely massive. And in fact, the shares fell another 3% today. So they're currently trading at about $15.7, which is absolutely insane. You can see the trend here for the past 2 years. So from, let's say, mid-April to today, the shares are down almost 40%, which is really crazy, given the trend we've seen in the S&P. So this is what we're trying to work out. Like, is Western Union one of these businesses in secular decline? Is it one of these businesses that is going to struggle in the future? Or is the market being irrational, and do we have a really good deal here? Right, so let's talk about the business model. Try and understand a bit more about what Western Union do and what are the fundamentals affecting the business here. So as you probably know, Western Union are in the currency transfer business, and they're one of the oldest and most respected operators in this industry. They provide currency transfer in pretty much every country in the world, and in more than 130 currencies, which was absolutely insane. I didn't even know that that was possible, but Western Union do it. And the majority of their business is consumer to consumer. So what that basically means is person to person. So you've got one person that wants to transfer money in the UK to Nigeria, then you've got somebody else in Nigeria waiting to receive that money, and Western Union will facilitate that transaction. That's basically how this is working. They've got a few segments to their business. The kind of legacy operation is sending money in person through one of the Western Union stores. In fact, most of their stores are actually third-party stores, which we'll talk about in a minute. But because of obviously the way things are changing, Western Union have had to adapt, and they're now looking at an online platform, and they've also got their app up and running so people can send money directly through the internet without having to go through the old method of using cash. So these are the kind of locations that Western Union operate. I just wanted to give you guys an example. So I've typed in central London, and you can see close to the location we've got Ryman, and we've got Robert Dias. So these are both third-party stores. Obviously, Ryman is a stationery shop. Robert Dias is like ironmonger, like home. And you can see that Western Union have 1,761 of these operators just in London. So it's really, really convenient if you want to transfer money. The chances are that there's a store where you can send money with Western Union not very far away at all. Yeah, this is the online platform and the app, which is really, really good. Western Union need to do this. And they've also got this online shop, which I thought was very, very interesting. One thing that we're going to talk about in this presentation is that the currency market online, there's much less of an economic moat, much less of a competitive advantage, and much fewer barriers to entry compared to the in-person segment. So that's something that we're really going to have to analyze. One really, really good thing about the shop that they've launched is they have all of these benefits like, you know, cashback with subscription, deals, coupons, all this kind of stuff, and it's going to keep the retention rate on Western Union, which is really, really important because they need to generate as much of an economic moat as possible from this segment because their economic moat historically has come from in-person stores. Right, so let's talk about this economic moat in a bit more detail. So I've mentioned that Western Union definitely have one, but the question is how wide is it and how quickly is it eroding? So you've obviously got an economic moat through the brand. Transferring money is a big thing for a lot of people, particularly if there's, you know, migration into the country and people are sending a proportion of their wages back home to their country of origin. They want somebody that they can trust to do currency transfer, right? And Western Union have that legacy brand. They also have really, really good relationships with the small businesses that they work with in their business segment. They've also got a really good network effect, right? If you think about the way currency transfer works, like every single agent that's going to join Western Union, it benefits them because Western Union already have 500,000 global agents. You know, people like Ryman's, it might be a bank in South Africa, whatever it happens to be. They're going to join that Western Union network because then there's going to be more demand for their services because then when somebody comes in to transfer that money, they can send it to any of those other agents all over the world in practically any country, right? So they're going to join Western Union's network, and then that just creates a snowball because the more shops, third parties that there are on Western Union's network, the more it benefits the rest of those third parties and also the consumers using them. Western Union has demonstrated a lot of reliability, and its top agents have been a part of its network for a long, long time, which is really, really good to see. It shows that they have really deep customer relations with those agents. I just wanted to show you this network in a little bit more depth. So, for example, here is Nigeria. We type in center of Lagos, Nigeria, and as you can see, there are some agents that come up that are really, really close. And I think one key thing that I haven't really answered yet that I think is important to go through is why are people still using in-person physical currency transfer stores? It's because a lot of people are still using cash. And I know that might sound crazy if you're watching this as a Brit or as an American, where 99% of people have bank accounts, but in somewhere like Nigeria, only 40% of people have bank accounts. So if somebody who is working as an economic migrant in the West is trying to send money home, they're going to want to do that in cash a lot of the time because their family might not have a bank account. So this is why these cash transfer stores are still alive and kicking. And to have over 1,000 physical stores just in Nigeria, it's a massive, massive economic moat for Western Union. Like, they have such a vast network effect that it's very, very hard for new businesses to come in and take market share and operate in this industry because it's also a legacy business, right? A little bit like tobacco. It's kind of like, the growth, you can still extract a lot of value from it, but the growth isn't really there. It just discourages more and more entry, leaving Western Union to like reap the profits from these in-person stores. So I wanted to mention as well, because I think it was important to provide some evidence in this, is that a lot of people in the world still don't have a bank account. Bear with me, this was all the data I could find. You've got 2011 here, 2017 here. We've gone from 46% to 58% world average. Remember, this is the world average, right? Like, in order for some places, Denmark, Finland, New Zealand, to have 99% of people having bank accounts, there are a lot of places in the world that still don't have a bank account. And yes, this is increasing. So this is a risk for Western Union, and why it's so important they establish the online part of their business as well. So if we take the fact that this has increased from 2011 to 2017, from 46% to 58.5%, then that's 11.5% over 6 years, so that's 1.9% a year. So if you say, okay, this is going to keep increasing at 1.9% a year, then we should estimate that about 2/3 of the world will have a bank account by 2021, which is still pretty low, right? And then we're going to get up to 83% by 2030. So by 2021, there's still vast swaths of the developing world that don't have any bank account access. By 2030, this might change quite a lot. It might be faster, it might be slower. And yes, Western Union is going to have to continue to pivot to online, but in the meantime, there's still a lot of profit to be made from these in-person currency stores. Another important thing to mention about Western Union's business model is because they've outsourced so much of these physical expenses to these third parties, it means that they're a very, very asset-light business, right? And they don't have to spend that capital expenditure on maintaining all of their physical stores. And therefore they can use this money to, number one, pay that decent dividends we were talking about. And then number two, pivot away from the physical store part of their business and move to the online. They can use that that money that would have been CapEx for innovative projects, and then also maintain that healthy dividend at the same time. So I wanted to talk about migration trends, because obviously this is a massive part of Western Union's business model. This is Western Union's revenue by geography, right? And you can see the bulk of it comes from North America and comes from Europe. And Western Union have had massive tailwinds from increased immigration to the United States and to Europe in the past 20 years. And that's important. So one thing to mention is that the person that is moving the money pays the transaction, and that's what's responsible for Western Union's revenue. So you can see migration trends in the US. This is obviously a very, very long run graph, but what I wanted to illustrate was that in the last 20 years, migration has massively been on the rise in the US. We have seen less globalistic policy from presidents like Trump in recent years, but the long run migration trend has been very positive. And as long as this trend continues, it is going to really serve in Western Union's favor, because that's what they benefit from, right? They benefit from international currency transfer. Almost 90% of it was consumer to consumer. So what you want is people living and working in different countries to where they were born in, and then moving that money around the global sphere. You can see US immigration by country. This is just an example that like a lot of the US immigration is to these developing countries where a much lower percentage of people have a bank account, and therefore they still need to initiate a cash transaction. For example, in Mexico, only 36% of people have a bank account, and hence they're going to have to do that currency transfer in store and transfer it to a physical store in Mexico where somebody can pick up the cash on the other end. So let's talk about the risks of Western Union. It's a relatively non-cyclical business on the whole. You can see from the last recession, but it does have its recessionary risks. It wasn't so much that putting us into a recession was the main factor from 2020 harming its revenue, but it was the fact that the lockdown, the very specific act of lockdown, meaning the number one, the physical store locations were shut, but also because it's a pandemic and people worried about travel laws, etc., there was much less migration in 2020 and many people came home. So that is one massive risk. And that's what I put on this side, right? These are obviously temporary headwinds caused by lockdown, and they are diminishing. However, we can't rule out future lockdowns or future fear-mongering over COVID, and that might have a really big impact on immigration going forward. particularly from, if you have these emerging economies that are yet to get their vaccinations, have lower vaccination rates, and less solid healthcare systems. If they have to lock down and then people can't emigrate for work opportunity, then that will limit Western Union's revenue growth going forward. Another risk, so as I mentioned earlier, is there this kind of like threat to globalization? Are we becoming more protectionist and patriotic in certain countries? And is there going to be a limit to immigration going forward? Obviously, we saw Donald Trump's protectionist policy. We also saw the UK leaving the EU, and there are many countries in the EU that are very keen on leaving it at the moment, and a big issue of that is immigration. So if we are more protective to prioritising jobs to people that are born in the country, then that could be a massive risk for Western Union going forward. I will say though, particularly in Europe, the population is massively ageing with our baby boom from the 1940s to the 1960s, and we're going to have to rely on a lot of young labour going forward, and we're going to get a lot of that young labour from developing countries where the birth rates are higher and the populations are much younger. So that is something that the Western world is really going to have to think about going forward. I also wanted to chat about the new CEO because that is a very, very big point for Western Union. They had their old CEO for about 10 years. And we've got this guy, Devon McGranahan, coming in. That looks really, really positive. This is a really good thing for Western Union. He's got an MBA from Harvard. He's been at McKinsey for 20 years. So that's the smart guy part ticked off. But he's also been at Fiserv for 5 years, and he's been in management. And Fiserv was basically a fintech company. So this is going to be a really great experience, and it's going to help Western Union pivot and continue to transform innovatively in their online app part of their currency transfer, which is really, really promising. This is exactly what Western Union need, and I wish Devon the best of luck on his journey going forward. So a quick look at financials. The income statement, as I said, turnover's flat, operating profit has been flat but stable. Their margins have been relatively stable despite this dip, and the earnings per share, again, it's been relatively flat over the past 10 years. So that is a general picture, not much to comment on there. From a balance sheet perspective, the leverage looks absolutely fine. We're looking at a net debt to EBITDA of about 1 and an interest cover of 8. So that is all looking very sustainable. The total borrowing has been hovering around the 3 billion mark, which is absolutely fine given the size of the company. And if we look at the cash flow, so cash flow from operations, again, we've seen this slight negative trend, but it's relatively stable. The CapEx has been in a stable position. As I said, they shouldn't need to spend too much on capital expenditure going forward, as they are transferring to online, which is going to be lower CapEx. And their free cash flow, again, slight downward trend, but relatively stable. And here we see the dividends being paid out every single year. We've got the increase here. And if we go over to the dividend slide, you can see this dividend looks very, very stable. So going through this one by one, current yield 5.6%, ka-ching, forecast dividend per share change adjusted 3.6. So analysts think there's going to be an increase in the dividend next year, which is perfect. 3-year annualized change of 8.7, which is great. 5 years of growth, so proving that they can continue to increase their dividend over time, and they're committed to doing that. Free cash flow dividend cover of 1.9 times, so massive, massive margin of safety there. Average over the past 3 years was also 1.9 times. The turnover shrinkage is not great, but at least it is small, and their turnover is pretty flat. And obviously most of its turnover shrinkage is a result of Western Union being adversely impacted by lockdown, which is a temporary headwind. Free cash flow trend has been positive. EV to EBITDA of 8, that is absolutely insane for a company that is, stable in the S&P 500 to have such low EV to EBITDA is very, very good value. Same with EV to free cash flow. But you've got all these quality metrics still being very, very high. EBIT margin of 20%, cash return on capital invested of 18, and return on capital employed of 25. To me, it's still very much proof that this economic moat is strong and stable. Net debt to free cash flow of 1.6, very, very stable. And interest cover, so the amount of times they can pay the interest with their net earnings, is 8.4, which gives them a very good margin of safety to take on more debt if they need to. Right, let's go have a look at the valuation models and see if Western Union is a good deal. So here's the discounted cash flow for Western Union. You can see the free cash flow growing here. It's very, very similar layout to always. And actually the analysts, they think that the free cash flow is going to grow an average of between 4 and 5% next year, depending on which metric you use. So you can see quite a big rebound forecasted here. So what I've done is I've used that, and I think that's quite conservative, particularly given that most analysts are actually quite bearish, which is odd, given how much upside we're getting in this model. So I just said, okay, let's put 2 more years of 850 in. So it's a 5-year model. And that's pretty much it. WACC is coming out at 6.7, which I think is low. So we're going to have a look at the kind of range of discount rate in the matrix below. And the other thing is I put a long run growth rate of 0. I don't think Western Union, it's just to be very, very conservative, right? Like if they just maintain their business going forwards, that's much more of a conservative metric, like given that some of the headwinds that the physical side of their business is going to face long term. If we did put in like 2.5%, this is the upside that we're getting, which is absolutely nuts. Like, I think that that's probably a bit too ambitious. And it's also interesting that like when you get 27.6, that is to the high end of where the share price has traded over the past year. So that's basically that. If we come down here to the matrix, yeah, this is the thing. The only thing about the model that I did up there was that I think that the discount rate is probably a bit too conservative. I think maybe 8% is probably the best like range for the discount rate. If we go for even my most bearish case, which would say, okay, Western Union, it's not going to grow at all over the next 5 years, even with the new CEO that is very much into fintech, given his experience, and will help Western Union pivot. And even with the headwinds of lockdown going away, if we still said 0, and if we said 8% discount, we're still getting 29% upside at $22 per share, which is very, very promising. If we look at the EPS, so looking at the earnings per share forecast, again, the analysts, despite being very bearish, they forecast a decent bit of earnings per share growth, 5% average over the next 5 years. And obviously, given that 65% of estimates, 65% of actual earnings figures beat estimates, that's looking pretty good. If you plug these in with a 12.9 average PE, which has been the average of Western Union, we're actually getting 53% upside on an implied share price of $24, which I think is really, really good. The risk being here is like the current PE of Western Union is in the range of 9 to 10. So we put in a PE of 9. Obviously, hang on a minute. If we put in a PE of 9 into here, yeah, the shares are only slightly undervalued. If we put in a PE of 10, then we're getting 18% upside. I mean, this is very, very, very conservative, guys. You'd have to have a PE of 8 for the share price to be overvalued. And for a company that's stable with upside as they transfer to online currency, I think a PE of 8 is very, very low. And this is with all of the earnings per share being discounted at 8%. So I think maybe a PE of 10 is probably the best way to go, given the bearishness on the share price. And that gives us a target price of $18.62, representing 18% upside on the current share price. All right, so the moment has arrived. Am I buying Western Union? I can't help it, given my value investing roots. Yes, I'm buying Western Union. So a couple of things to say. Obviously, the DCF and EPS models you just saw show the shares are very undervalued, even when being incredibly conservative. Like, that DCF model, right? You got 8% discount rate at no free cash flow growth, bearing in mind that there has been free cash flow growth in the past, and we've just had a big slump because of the lockdown, right? And Western Union are forecast to massively rebound from that in 2021. Even if we saw no free cash flow growth at 8% discount rate, the shares are still worth $22 a share, which is that's probably 40-50% upside on the current share price. So that looks very, very positive. The lockdown headwinds, obviously they're dissipating. With regards to COVID, I think we're always going to get like media hysteria, and we're always going to get fears of lockdown. But the reality is, like, people have had vaccines, and the probability of a new variant escaping the current vaccines is very, very low. And the probability of Pfizer and Astra being able to adapt the vaccine to new variants, if needs be, is very, very high. It's something to bear in mind that we do have another lockdown that will negatively affect Western Union, but I don't think that is going to happen. It will negatively impact Western Union. The dividend yield of 5.6% is safe. It's safe. It's covered 1.9x by free cash flow, and that provides great downside protection because how low are people going to bid the shares, right? It really gets to that level where it's like 5.6%, and the only other safe yields this high we are seeing in REITs, tobacco, and in oil. This is a very, very safe, stable, legacy company. It's unusual to see a dividend yield that high. And the last time I saw a dividend yield that high in a similar kind of company was in IPG. And since buying that, the shares went up 70-80%. So it's another indication to suggest the shares are undervalued. And also there's less of an opportunity cost of holding the shares whilst they're undervalued and waiting for them to get to fair value if your yield is 5.6%. Because as we all know, that's a million times better than a bond and a million times better than a savings account in this low interest rate environment. One thing to mention though is we obviously saw this massively negative momentum, and it's almost as bad as like massive stock market crashes, right? So you never quite know when this thing is going to bottom out. It just got past this big resistance here. So you never know when the shares are exactly going to bottom out. So that is something that you have to bear in mind when holding these shares, is that you might have to cope with an unrealized loss for quite some time. But that's okay because, as I said, you're holding it for 5.6% yield. And also you think the shares are massively undervalued. You just have to have that conviction in your head. And I'd also massively recommend dollar cost averaging so that you can try and mitigate going in all in at once. And if the shares do go lower and you still want to buy, you actually have the cash position available to buy some more without getting more exposure than you want to in the company. So I hope you guys enjoyed the video. Please let me know any questions about Western Union in the comments, and I look forward to seeing you guys next time.